You have argued that the most important stock in the market right now from a technical perspective is Alphabet/Google, and that if it failed, the market could be in trouble. It looks like we could have a very big day for Google/Alphabet today. Would that be good news for the overall market?
It certainly should be. I mean, it's funny because all the other FANG stocks had broken to new highs. In other words, well above their January highs, not just above their January highs, but well above their January highs. Google had not been able to do that. That 1,200 level had been bumping up against it several different times, and each time it pulled back. A couple times it got slightly above it, but it couldn't pull away from it in any kind of meaningful fashion. Now it has. I mean, unless we get some sort of a tricky announcement in the middle of the day today and the stock reverses lower, this is exactly the kind of technical move you want to see. And some of the money that, it'll be interesting to see, though, because some of the money has been flowing into these other FANG stocks as they have made new highs, have been avoiding Google. It might be going into Google and maybe not so much into those other stocks. We'll have to see. But this is definitely a very positive move. I mean, the one concern, of course, is that the rally has been narrow, and just adding one more stock into the FANG issue, but it's definitely a positive move.
I think you read our show rundown ahead of time somehow, Matt, because in the next block, we're going to show and tell our viewers just how maybe narrow and important some of these stocks are. That aside, let's not get ahead of ourselves here. If Google can outperform, will this again be the donkey that pulls the entire market cart?
Well, again, it's hard to say because when the market gets this narrow, it's never a good sign, at least over a longer term period. And the other thing, of course, is to watch is the semiconductor stocks. A lot of the chips got hurt pretty hard yesterday, and they're lagging. And it's interesting because the SOX semiconductor index has been the other key leader in the technology area away from the FANG stocks ever since the presidential election of 2016. So if these things continue to lag, it could cause some problems. But right now, it's at least for the tech area, this news out of Google is a very positive development.
Okay, so Google is now sort of out of the way, okay, and you were very prescient on that. What is next on your key market radar, Matt?
Well, I mean, away from these the technology stocks, of course, is what's going on in with the trade wars and tariff concerns. And for me, that really falls into the currency markets. I mean, everybody was saying for a long time that, geez, there's only so much China can do. They can't really fight back as much as we can, and they certainly can't in terms of tariffs, but they can in the currency markets. Now we see how what's happened in the the yuan versus the dollar. It's seen this major move. They're devaluing their currency, and that's how they're playing the trade war. That's going to be a concern as we move into the further into the second half of the year. So you got to be watching that closely. And the same thing with in the yen. Everybody's been talking about how we've been concerned about the Fed tightening, and of course the ECB has tapered back on their QE program. Now there's rumors going around, and then they're sending out messages that they're at least trial balloons that they're going to start tapering back a little bit as well. So if the BOJ does that, and we see some strength in the yen, that's going to tell us there's a little less liquidity in the system, and that causes a headwind as well.
But I'll put a different spin, I suppose, on that China story. And they pulled, as we called it, I think a couple of weeks ago, the economic bazooka of the currency devaluation in China. Wouldn't that be also in some ways deflationary for the U.S. consumer, and thus maybe can ease back on some of the Fed rate hikes? Because if they cut their currency, or if their currency falls, either way, things in America, all that stuff we buy that the president doesn't like, gets cheaper.
And that's positive. The one thing we've got to look for is that, the whole tax thing, when he cut the taxes, it's very, very different than any other president that I'm aware of has ever done, at least in modern times, because they always come out with these kind of programs, especially in their first term, that are back-end loaded, so it'll look real good the next time they come up for re-election. Trump, on the other hand, front-end loaded everything. And so it's, as that we work through that this year and into early next year, how much more is that going to play out? And we're seeing a slowing in a lot of the economy, a lot of the global economy, whether it be in China or in Europe. What happens was, as the Fed is tightening, and we have this, the effects of the tax cut start to pull away, that could cause some problems. So my big concern is that we're not only, you talked about Google pulling the whole market higher. Well, the U.S. is pulling the whole global economy, keeping that up. If that starts to fade, we have some problems. That will cause the Fed to ease back. The problem is, I believe that the Fed is just as much market sensitive as they are data dependent, and so if one of the major reasons that they'll pull back on their tightening cycle is because the markets are coming down, not because the economy is going to.
We'll see if they're POTUS dependent as well, with the president's comments about the Federal Reserve as well. We'll see that's another sort of factor that gets thrown in.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.